Yeah, we are live, Harsha.
Okay.
So you are able to hear?
Yes, I am able to hear you.
Yeah. Dear subscribers, sorry for the delay. It has been something technical to do with the Zoom. So now we are going with the Indian thing, which is the Zoho. So now we have Mr. Harsha Upadhyaya, the Chief Investment Officer of Kotak Mutual Fund. Today, Kotak Mutual Fund is one of the top 5 asset management companies in India. They manage close to 5 lakh crores of assets, and the Kotak Mutual Fund, as you all know, is part of Kotak Bank, which is a listed entity. Harsha oversees the management of both equity and debt assets. He himself manages 5 funds, including the popular funds such as FlexiCap, Equity Opportunities, and the large and mid cap fund. With the equity opportunities is the large and mid cap fund, and then multi-cap. So Harsha holds a Bachelor of Engineering from NIT Surathkal and from MBA from IIM Ahmedabad, IIM Lucknow, and he is also a CFA from the CFA Institute. He has more than 26 years of experience. He has been with Kotak for quite some time now, and he has built up the business along with his colleagues. Prior stints have been with the DSP Mutual Fund, UTI Mutual Fund, and Reliance Group. Welcome, Harsha, to our channel. Sorry for the delay faced, and so we are here to go. Once again I request our subscribers to forgive me for the delay. To start with, we are half an hour delay. So anyway, to start with, how is the fund industry doing right now, and how is Kotak Mutual Fund doing? You being one of the largest players in the country.
Good morning, everyone. Apologies for this delay. As far as industry is concerned, I think things have been fantastic for the past few years. The retail interest in equities has really picked up in India, and that's showing up in terms of how mutual fund industry has been growing. And despite the volatility in the very short term that we have witnessed over the last few months, I think people have believed that equities are a long-term asset class, and to that extent, the SIP inflows continue to be as strong as ever. And overall, the industry continues to grow at a decent pace. And within the industry, Kotak Mutual Fund has also done well, thanks to all your support, all our investors and our partner support, and continues to gain market share in the industry, and hope to continue with the good work that we've done over the past several years in terms of consistently providing reasonable returns to our investors.
Good, Harsha. Last week, a few days ago, when you were here in Chennai at our office, you mentioned that the fund industry, it's as a retail investor base, due to retail investor base and growth of assets, profit from the investment, the industry is almost doubling every 4 or 5 years. Am I right?
That's right. In fact, if you look at every 10 years, the industry has gone up almost 5 times. It used to be about 1 lakh crore industry in 2000. By 2010, the industry had grown to almost 5 lakh crores. And by 2020, it was about 24-25 lakh crores, if I remember correctly. And as we speak now, we are close to 70 lakh crores. So clearly, the pace of the industry has been fantastic over the last 2.5 decades. And even in the short term, over the last few years, the industry has grown at a healthy pace, I would say.
Good. But that is good for all the investors because their assets are also growing, and the profitability is also growing for companies, everything, and the economy, when the economy grows very well. And how is the on an Indian economy side? How is the Indian economy doing? In the recent past, just a week ago or something, there have been some good news about inflation, IIP data and GDP growth, etc. How do you view it on a macro level in the Indian economy?
I think in the volatile global backdrop, I think India has been doing reasonably well, reasonably consistent, I would say. although there was a dip in our economic growth in the second quarter of financial year 2025, the September quarter of 2024, wherein our growth slowed down to about 5.6%. From thereafter, we have again seeing improvement in the growth rates. December quarter was 6.2%, and we expect next year it's going to be somewhere around 6.5%. In terms of economic growth. So I think slowly and steadily, economic growth is coming back to a normal rate of growth. And at the same time, we have also seen inflation dropping quite significantly. The last sprint that we saw on inflation, CPI inflation for India, was about 3.6%, which clearly shows that inflation is coming under control. It's coming in the range that RBI wants it to be, which means that potentially we can see a few interest rate cuts going forward. So all in all, I think after a blip that we saw during the middle of this financial year, we are seeing improvement in the economy, and slowly that should also percolate to corporate world in terms of better profitability, better demand, etc.
Okay, good. And one of the things, as we have given the topic is the market correction over. So there is a topic until a week ago. Everyone was pessimistic, everything was negative, things were so bad for the Indian market, and all of a sudden, we are seeing things turning upside down. And is really the market correction over? What are your views?
See, as always, market continues to surprise in the very short term, and it is very, very difficult to predict how markets would move in the very short term. The reason for the sharp pullback was for almost about 2.5 months, we had seen markets going down almost on a daily basis. So it was definitely quite oversold from a technical perspective. And we have seen a decent pullback from those levels over the last few trading sessions. However, from a medium-term perspective, I think we still need to watch out for the earnings trajectory in the March quarter earnings that will start coming in from middle of April until, say, end of May. And thereafter, how our rural economy comes back into shape during the monsoon season, and how corporate earnings trajectory is likely to proceed from thereafter in the June and the September quarters would be key for market stability and direction thereafter. With the correction that we have seen in recent times, clearly on the large cap side, we have seen valuations correcting to historical average levels. So to that extent, one can say that we have seen a healthy correction, and the valuation risk is minimal. However, on the mid and small cap side, still there is a premium compared to historical averages. So to that extent, it is difficult to say just based on the valuation range that correction is completely over. And also, if you have seen 4.5 years of rally, whether that kind of a rally corrects for a couple of weeks and then the correction is over or not is a question to be answered. In most likelihood, probably we are likely to see markets consolidating at around current levels with a little bit of volatility for the next few months is what we think at this point of time.
So, kind of, if I have to summarize, it's kind of the worst is behind us, probably.
So from the very short-term perspective, maybe yes. From a medium-term perspective, difficult to say that yet.
Okay. So probably with the quarterly results coming out, we will have some more clarity. That's right. And as you are mentioning the consolidation phase, probably if we assume that, of course, no one can predict exactly, but if we assume that, the worst is behind us for temporary period, and, the market might consolidate, how long probably, I do agree that no one can exactly give a number, but from your past experience in the industry, will it take 3 months, 6 months, or 1 year, 2 years? How long the consolidation might happen?
See, we have already spent about 6 months in the correction phase. Actually, the markets peaked around end of September. So we are already in March 2025. So to that extent, we have already spent about 6 months in correction. Maybe another couple of quarters of consolidation is what is likely. And also that ties in with our expectations of gradual improvement in the economy as well as quarterly results. So hopefully in about 2 quarters, we should be seeing better visibility both on the economic growth as well as on the earnings growth. And by then, the valuations would have also got adjusted nicely. So I think we should expect at least 1 or 2 more quarters of sideways at best, and maybe a little bit of volatility in the worst case to continue.
One of the things that in our earlier conversation you mentioned was, say, like in the financial year 24-25, in the first quarter, second quarter being election quarter, kind of. So, the government spending did not happen, and probably in third, fourth quarter, it is happening. So, can you elaborate a little bit on that, so that, just to give some reasons for this, why going forward things might be better?
Yeah, as per the interim budget of last year, the government was expected to spend roughly about 90,000 crores or so every month on capital expenditure, which is really what drives the economy in terms of the investment cycle predominantly. Right? And what we saw was quite sluggish numbers until about October, November of 2024. This is a phenomenon which we have seen every 5 years during elections. Elections happen around the summer period. The results are available by let's say June, and then the final budget is presented about a month later. And thereafter, the actual capital expenditure usually picks up. And that's what was expected even during 2024 post the elections. However, this time around, unusually, the delay continued beyond 3 or 4 months and continued well into October-November period. We also had very erratic weather pattern in summer as well as the rainy season during 2024. That could have also impacted some bit of economic growth. And as we all know, the rural population has been reeling under pressure post COVID disruption. It's slowly coming back to normalcy, but it obviously was not in the best of the shapes during middle of 2024. So to that extent, all these factors would have led to a slower economic growth, which is what September quarterly numbers are showing. It is at 5.6% growth, which is one of the lowest that we have seen for several quarters in the post-COVID, I would say. However, we have seen capital expenditure picking up quite nicely from the government side. Now they are spending almost about 1 lakh crores to make up for the delay that was there in the first 6-7 months, and also to meet the budget targets. And for calendar year 25 as well, we should be expecting a similar kind of run rate, which means that with a lag, this is going to improve a lot of things in the economy. We have also seen agricultural crops being at one of the healthy rates in the recent times. The reservoir levels are very strong, so the next crop season is also likely to be very good. All these factors should also help rural economy to come back in shape. So ideally, another couple of quarters, and we should be able to see better growth at the economic growth level as well as at corporate earnings level.
The government spending is one of the major drivers, for the economy. Am I right?
Yeah, that's true.
And then plus the recent budget thing might also kick in.
Yeah, I think from April onwards, so anyways, there is a budget provision for cutting tax rates, which will take place. That will also lead to more money in the hands of consumers, which will go into either consumption or into more savings and investment, etc., which should also be positive for the economy. So all in all, I think over the next few months, we should ideally see things picking up from here.
Okay. And one more thing, I think you already touched upon a little bit. Just I want to make it clear. Until a few weeks ago, say in the last couple of months, I would say 2 or 3 months, mid and small cap, there was a lot of noise. People were saying, don't do SIP, do SIP, cut SIP. It's highly overvalued. It's in bubble territory. There were a lot of discussion in the market going on newspapers, journalists, everyone was covering. So after this recent correction, of course, in the last week, things have picked up 7% in small cap and mid cap, some 6-7%, if I'm right. So is the small mid area, the small and mid cap area, is it reasonably valued or still overvalued? What do you think?
Yeah, at the end of February, clearly the large cap valuations, when you compare it to 15-year long-term average, it was just below the average valuations. In the month of March until now, we have seen a little bit of higher levels in the market. So maybe it is around average levels or slightly higher than average levels. So which essentially means that there is not much valuation risk for somebody who is investing into large cap category or categories which are dominated by large caps, let's say large and mid category or flexi category, etc. From a 3 to 5 year perspective, nobody can predict what's going to happen over the next 3 months, 6 months. But usually, when you invest at around average valuations of the long term level or below long term average levels, usually you end up making reasonable wealth over 3-5 year period. And we have already reached that space in case of large caps. However, in case of mid and small caps, we still believe there is a premium of about 10 to 20% compared to their historical average levels. And at the same time, the earnings expectations for mid and small caps until now have been higher than that of large caps, right? So because of the higher expectations, there has been a higher premium that investors have been willing to pay for mid and small caps for that higher growth. Now, if you look at the previous quarterly results, the earnings for mid and small caps have been more muted than expectations, and also in many cases have been negative, whereas large caps by and large have been marginally positive. So to that extent, two things are happening. One, the earnings expectations of mid and small caps have been coming down and coming down quite rapidly. On the second side, we have also seen some bit of valuation correction. So, but we still believe there is about 10 to 20% premium in terms of valuation at this point of time. And in case we continue to see disappointments on the earnings, then maybe this 10-20% premium will look like even higher number when we go into April-May period. So that's the risk that one still has when one looks at mid and small cap valuation at this point of time. And also, there are no indications that suddenly you will start seeing significantly better earnings growth for small and mid caps in the very next quarter. And that's why, as I said earlier, we still expect the markets to kind of remain in a correction mode or a consolidation mode for the next couple of quarters until we see a clear visibility in terms of earnings growth picking up for Indian corporates. Or the valuations will have to still correct further so that the valuation risk in mid and small caps goes to a level where you get comfortable.
Similar to large cap, kind of, or lesser than large cap, whatever. And so with all these challenges, generally, one thing, China, like in the last few decades, as China grew, they didn't have any competition, kind of. But now India is growing with a stiff competition from multiple fronts. So what will take the Indian economy to the next growth path? Is it only local consumption, or we have to depend on exports, or how is it on a macro level picture?
No, I think every economy will continue to look at all the growth opportunities. While the global backdrop is not so conducive for exports growth, there are various readjustments that are happening on the trade and commerce side globally, which means that the kind of runway that was available for any economy to dominate exports markets in the past is unlikely to be available over the next decade or next 20 years, because every economy has started to look inwards and started to protect their own economies rather than depending on other economies for supplies, etc. There are several other political reasons as well why such a thing is happening across the globe. Be that as it may, I think it's not going to be easy for anybody. First, to develop the capabilities as China to really dominate the export market is available this point of time. It's the and some economy to have sort of strengths. I don't think it would have been as easy as what it was for China over the last 20 years to really dominate exports market. In that regard, I think India is quite well placed because we are not so export dependent in terms of our growth trajectory. We are generally domestic focused, domestic dependent economy. And despite all of the hiccups that we have seen globally or locally, our economy has continued to grow at a pace which is one of the highest in the world. So to that extent, I think we will still be not impacted as much as some of the export-oriented economies such as China, Taiwan, Europe, Mexico, Canada, etc. Despite whatever is happening in the globe.
And so predominantly it will be run by local consumption plus our expertise on IT or whatever, the manufacturing, all those things.
Yeah. I think wherever we are focusing currently in terms of increasing exports focus will continue to be there, but that may not be the predominant driver for our economy. For our economy, I think the domestic part will be the one where we need to continue seeing focus.
Sure. Okay. And something connected as we also a little bit discussed is the trade wars, that are being fought right now, between the US and other countries. And in one of the recent talks, the federal chairman, US Federal Reserve chairman, told that it is not an issue. It is the inflation will be only transitory. That's why we might be reducing interest rate, something like that. So how important or how riskier these tariff wars are for India and others, of course?
No, I think we have not seen the end of the tariff readjustments. I think it's only the beginning where we have seen certain statements. Certain statements have been made, certain statements have been pulled back, revised, and all sorts of things are happening. I think it's too much of change that we are seeing at this point of time. Really difficult to predict which way things would head and ultimate impact. However, one thing is certain that as far as US trade relations are concerned, larger importers, larger imports are coming from China, Canada, Mexico, and European region, right? So their immediate focus is going to be to see what can they do on these 3-4 regions rather than India in particular, and that's what even in the run-up to actual changes in tariffs, etc., their focus seems to be on these 3-4 nations. And also, as far as India is concerned, while we do have a reasonable exports to US, most of it is coming through services part, not manufactured goods. And tariffs can be imposed on manufactured goods, but not on services like IT services, etc. They could have a different way of making it expensive or making it difficult by having visa restrictions or increasing the cost of doing that business or asking them to recruit people from American population, etc. So which could increase the cost for doing business, but it cannot really impede the overall business as much as it would do in case of a really high tariff. So net, yes, there is going to be volatility because these changes are unpredictable at this point of time, and a lot of things are very fluid, and markets generally doesn't do well whenever there is unpredictability and volatility in the external environment. Markets like predictability, and at this point of time, predictability is quite low. And also on top of that, the valuations have been higher for some segments in the market as far as India is concerned. So that also put up more readjustments in terms of valuations. But by and large, I think India will be not as much impacted as other nations. But until we find out what is the exact impact, markets could remain nervous in terms of likely adverse impact, etc.
One thing, just you mentioned that services may not be tariffed as high as manufactured goods. Just can you elaborate this for my own purpose?
No, for example, if you are exporting automobiles or any other manufactured goods, you can put a high tariff and make it prohibitive for that country to really export those goods, right?
Yeah, agree.
However, in IT services, you can't really put a tariff, or if it is some legal services that somebody is providing, it's very difficult to do. What they may do is they may say that we will not provide more than X number of visas for low cost Indian IT services personnel, right? By doing that, if the visa costs go up, if you have to recruit somebody from America itself, your cost of running that business can go up. So that's what could happen on the IT service.
But they
Will
cannot.
continue. Maybe profitability margins will get impacted to some extent. There could be a readjustment. But in case of manufactured goods, suppose you are manufacturing it at $100, and there is a 50, let's say hypothetically, then the landed cost of that good will become 150. So at 150, whether you are competitive or somebody else in the domestic market or somebody else from some other economy is more competitive, we need to see that. But in case of services, I don't think there is such an issue. But if the cost of doing business
Might increase. So I understand. So you mean to say that they may not put a tariff on services?
Yeah, it cannot be put on tariff. Services.
Okay.
In manufactured goods, it is easy to say that so and so goods will be attracting X%, Y%, but in IT services, it's difficult.
Okay, good. And coming to the domestic economy, what are the sectors that are attractive right now for investment?
I think clearly as market valuations have been higher for a long period of time and have only corrected in the past few weeks, it's difficult to really get large sectoral plays where the valuations have been very comfortable or very attractive. One subsegment of a large sector, which is banking sector, within the banking and financial services sector, is somewhat comfortable in terms of valuations. And this is also one sector which has not performed in line with the market because of the regulatory headwinds, because of the slower growth, etc. Now some of those negatives are also turning around, and we believe that there is a reasonable valuation comfort when you look at banking within the overall market. Apart from that, there are many sectors where valuations have corrected quite nicely over the last few months. However, from here on, I think in the early part of the recovery, I don't think entire sectors participating uniformly. Usually that happens in a bull run, in a market where people believe that every equally well or similarly well, the valuation go to higher levels. But in this kind of a market, I would say that one needs to be more stock specific. Even within the sector, the performance could be quite divergent. For example, in automobile sector, two companies could be very different depending on how their volume growth is, how their profitability growth is over the next couple of years. But in a bull run, what happens is essentially the companies which are doing well will anyways get higher valuation. And people also expect some of the companies not doing so well to reach those levels over the next few years and hence start doing those valuations. Now there has been a correction and there has realized that the valuations were high and we cannot continue giving those kind of valuation. With that backdrop, I would say that we may not see a sectoral moves as uniformly as what we have seen in, let's say, 2023, 22, etc. In this phase of the market. Maybe 6 months down the line, 12 months down the line, when things become better, maybe you will again get into that kind of a phase. But at least for now, I think it is better to focus on a bottom-up stock basis.
Okay. So then, the one more thing, in the recent past, SEBI has come out with this, mini PMS, are also known as specialized investment funds. SIF, we call it as mini PMS anyway. So that's what SEBI wanted to address. So when Kotak Mutual Fund is planning to launch, or do you have some plans in the next quarter or so?
Very recently, we have got the guidelines from the regulator in terms of the contours of SIF. I think it will take some time before we think about a set of products which will be suitable in that category. We will also come back to you and probably do some terms of understanding whether there is a need for such a product from the investor community, etc. We will also have to provide dedicated resources to run SIF, so which will also take some time over the next few weeks, next few months. And then we will have to finalize the product internally and then go to SEBI for approval. So given all this, I would say that it will take few more months before you actually see products in this category. Maybe middle of 2025 or later part of 25 is when you will start seeing some activity in terms of new products in this segment.
Okay, so at least couple of quarters maybe next year. And on the, I have one or two questions. After that, probably we will open up the dice for any queries from our subscribers. And what is your view right now on international funds, particularly US funds, so that people should kind of reduce their allocation to international equities and increase allocation in India? How is your view?
Right now, there is not much of an option from mutual fund industry to really take international exposure because the SEBI limits are full, and I think most funds are at limit. So nobody is taking fresh subscription into international exposure-oriented funds. And also on the US market itself, the market has done significantly better than many other global markets over the last 10, 12 years. At one point of time, US market used to be about 40 to 45% of the global market cap. And this was in the year 2012-14, in that phase. Okay. Now that has gone up to almost 65% of the global market cap.
Wow.
Which shows that even that market has significantly gone ahead, partly because the fundamentals were very strong, partly there has been an overvaluation even there. And in the very short term, we have also seen some volatility building up in the US markets, some corrections happening. So I think it's better to not make fresh allocations there, given that the valuations have run up quite a bit there, and the correction seems to be beginning even there. And anyways, from an Indian mutual fund perspective, the limits are full and you can't really invest.
Okay. Got the point. And from your table, are you planning to launch any new funds? Because now the NFOs have reduced as the market also corrected. NFOs reduced. Do you have any plans to launch any mutual fund in the recent past? Any sectoral, any thematic, anything? Do you have in mind?
Yes, we will have some products during financial year 2025. We are beginning with an energy opportunities fund next month. We have been holding this approval for quite some time, but we were cautious on the market valuations, and hence we were kind of holding back. And now that the markets have corrected, valuations are reasonable. In fact, energy segment started correcting even before a September period, September peak. While the markets peaked in September, probably energy and the related sectors started correcting from May, June of last year itself. So to that extent, there has been a reasonable correction in terms of valuations. The long-term attractiveness of this industry continues to be very strong. We would be looking at traditional energy, which is your oil and gas, power, etc., as well as some of the newer segments of energy like solar, wind, renewables, all of that, and also the ancillary segments around these energy sectors. So all in all, we believe that it's a very, very strong opportunity from a medium to long term. And also, we have seen valuations correcting to reasonable levels. So we are planning to come out with this NFO next month, in the month of April. And beyond that, yes, we may have a few more products during the year as well.
Okay. That is good news. And from you, although you oversee the total fund management as a CIO for Kotak. You are also personally managing few funds, as we said earlier, Kotak Multi, Kotak Flexi, and Kotak Opportunities, which is a large and mid-cap fund. After that, another couple of funds. But in this broad category, Flexi, large and mid-cap, multi-cap, where do you want to take bulk money right now?
See, as we discussed, the valuations on the large cap side are more or less at historical average levels. There is not much of valuation risk. So to that extent, if somebody is looking at lump sum investments, I would suggest them large cap or large cap oriented funds. So anywhere you have at least a 50% kind of a large cap allocation is something that would be suitable for most investors at this point of time. So whether it is a blue chip fund, which is from the large cap category, or a flexi cap where we have close to about 70% allocation to large caps at this time, or even large and mid category where equity opportunities is operating, where we have currently about 55% large caps in the portfolio. Any of these would be suitable. If somebody is looking into slightly more aggressive products like multi-cap or even mid or small cap, I would suggest that maybe doing SIP would be a better way of managing volatility rather than making a lump sum at this point.
Okay, good. And probably we are coming to an end. Then I want to end our discussion with a personal note. Anything that you would like to share about your family, hobbies, likes, dislikes, what do you love, all those things?
For me, my job itself is like a hobby. I mean, I think every day is a new day, and every day there are new developments that keep happening that keep you clued on in terms of what's happening in each industry. Sometimes it may not be there in your portfolio as well, but you just want to know and understand those things. So that's been a job as well as hobby, I would say. But otherwise, I used to play quite a bit during my younger days. I don't play anymore, but I do follow most of the sports sitting on the couch, I would say. So yes, that's something that I do as a hobby.
Good. Great, Harsha. Then probably we have some questions. We will take that for another 5-10 minutes, and then we will end this session.
Sure.
Yeah, I'm getting some questions in chat box. Siva, he has a question: Is it the right time to invest in multi-asset fund or balanced advantage or gold mutual fund or hybrid? Anyway, so as the market is volatile, so he is asking either gold or these hybrid funds. Is it the right time to invest?
See, gold fund, I wouldn't push at this point of time unless you have zero allocation to gold. If you have some allocation to gold, which I think most Indians would have, I would not be pushing for further allocation, simply because this is one asset class which has done better than equity, or if not better than equity, at least as much as equity over the last several years. I think has given fantastic returns. Usually investors end up looking at past returns and keep increasing their allocation. I think that's one of the riskiest things to do. It may continue to do well for some more time, but I think one wouldn't want to really increase allocation at this point of time. One can continue holding whatever it is, or go through a diversified way of betting on gold. For example, the investor has also asked about multi-asset allocation funds. That would be a better route to take gold exposure, because the portfolio managers would be in a position to alter gold or silver or any other asset class based on the valuations and the comfort. And also it comes with a better taxation. If at all you are worried about what the valuations are, how to understand the valuations, at what valuations, what allocation is to be made, etc. One simple way is to go through hybrid funds and leave that to the fund house and the portfolio manager to decide. The other way is to take a proper financial advice and split allocation based on the risk profile and the expected needs, liquidity requirements, etc., with the help of the financial expert, and decide individually on individual funds. You can take few equity funds, few fixed income funds, maybe a gold ETF, etc. So it's a choice that investor has, and everyone can decide based on what is more convenient and suitable for oneself.
So gold probably not at this time until unless the customer doesn't have any allocation at all, and would be better, multi-asset or other hybrid fund. Then A for asset. Delhi government ban to petrol vehicles planning reason over pollution. Next, overall India pollution zone institute. The EV sector government, any plan you increasing to the, I mean, the overall thing is EV sector, electric vehicle sector, because of the Delhi government ban and all those things. What is your view? That's what he is asking.
Sorry, I mean, what is the question?
He is saying, so Delhi government has banned, because of pollution, the
diesel vehicles,
internal combustion engines or diesel, whatever it is. So, because of which probably he is thinking EV electric vehicles will pick up, and what is your view on the electric vehicles, something like that is his question.
No. What has been banned is only more than 15-year-old vehicles. It's not that every IC powered vehicle is banned. And yes, I mean, electric vehicles are gaining foothold in the Indian market, but even today the numbers are very, very small. I think India is still dominated by IC engine powered vehicles, and will continue to remain that way for quite some time, because the infrastructure that is needed for electric vehicles is not so great in India. The cost is also quite high, and given all of this, the shift from IC powered vehicles to electric vehicles has not happened as much as what you would have seen in some other parts of the globe. Even today, most people use it only for city driving rather than going outside the city, because you don't really get the charging stations, etc. So I think it will be a slow penetration, gradual penetration. I don't think overnight anything is going to change in the Indian context.
Okay. Then one more thing, Sriram PM, can you share your views on Trump tariffs on Indian exports? Will there be sell-off post April 2nd? I don't know why post April 2nd, but he's asking post.
No, I think we discussed in terms of how tariffs are likely to impact, etc. It's too early to say exactly what will be the impact on each economy, each sector, etc. But definitely there is going to be readjustment. Economies, sectors will have to rework and think how competitive they can be in the new scenario, etc. I think over the next couple of months, we will have a better idea in terms of the actual impact on each economy and each of the sectors. But as I said, if you look at it from a top-down perspective, currently India is going to be relatively better off compared to some of the exporting nations like China, Mexico, Canada, etc., which are closely linked to US economy, as well as their share of exports to US is really, really large as compared to the others in the globe.
Okay. Vairavan Alagappan has a question. Explain about Kotak arbitrage fund and their return so far. As per my understanding, in volatile market only arbitrage fund will perform well. Do you recommend to buy in fixed method or for 1 year from now? On your arbitrage fund is up.
Yeah, the arbitrage funds have no market risk. It doesn't move based on the market direction. All the positions that we take are completely hedged. So there is no open position, there is no open risk. And what you get is the arbitrage margin that have been locked at the time of the initiation of the trade. And generally it moves with short-term interest rates and the amount of interest that you see in the equity markets, which also drive arbitrage margins, etc. Broadly, one can look at it as something which will probably compete with your FDs with a better taxation and slightly expected better returns over a period of time. And it doesn't have the same kind of lock-in as your FD would have. So those are the advantages. But whether the market goes up 20% or falls 20%, it is unlikely to move along with the market. It is going to give you slightly better than short-term interest rates.
There is one more question from Sarveshwaran. How is EV segment entry into the automotive industry and the mutual fund focus on the EV-based company investment for the future? I think, are you focusing on electric vehicle-based companies for your investments? That's what is question.
Yeah. I mean, we look at all the growth areas. We look at all the possible opportunities. And it's not restricted to one theme or the other. So as I said, it's rather than thinking about sectors, I think this is the time to think about diversified funds and a long-term approach. I think gone are the days where some theme would be spoken about in the media or in the discussions, and that theme would give you very high returns in the market. I think the current markets are unlikely to give those kind of opportunities, and investors should also build their portfolio from more of a medium to long-term horizon rather than worrying about which particular industry or sub-segment would do well in the next couple of months, couple of years, etc.
Yeah. Anyway, you are, I mean, from your fund investment management perspective, you are also considering electric vehicles as an option. Okay. I think that's what this question is. You mentioned, but again, there is a question here, Alavisundar. What's your view on BFSI sector? Are there more upside from here that can be seen this year?
On the BFSI?
Yeah, banking, financial services.
Yeah, within BFSI, we have been more positive on some of the large banks. So again, NBFCs have done well. Various other segments of BFSI either has done well or has seen valuation moving up, or some headwinds coming in, etc. So we are not as positive as we are on banks in the rest of the segment within BFSI. But yes, large banks would be something that would continue to do well in our opinion.
So in your banking and financial services fund, you might be focusing more on banks. Am I right?
That's right.
Okay. Tyagarajan. CJ Tyagarajan, how real estate sector behave in comparison to equity in the immediate and medium term? In Tamil Nadu cities, especially Chennai and Kolkata. Anyway, he is asking, let us put the question, a generalized question. How will the real estate perform when compared with the equity market?
I am not an expert on the real estate market. As far as the real estate stocks are concerned, they are also as expensive as what many of the other sectors are. And again, I don't think the entire sector is going to perform as uniformly as what we have seen between 2020 to 24. One has to be more bottom up in terms of selection of stocks within the real estate sector. And also we should remember that this is not at the nascent stage of a new upmarket for real estate. We are probably in the mid cycle already. We have already seen 3-4 years of very good growth in the sector. So to that extent, a lot of positives have already played out and valuations have also moved up. So one needs to be careful there as well.
Okay. But one thing can we say, Harsha, and whatever I have analyzed from my experience, in the longer duration, even in the longer duration, 10, 20, 30 years, real estate, raw real estate, and now when compared with the equity markets or mutual funds, let me say diversified equity funds have done better than, or equal at least, or more than the.
Yeah, and when you look at real estate, it is very, very dependent on the micro market that you are invested in, right? And also it comes with very little liquidity and inferior taxation as compared to equities. Equities give you a high level of liquidity, much better taxation, much more diversified exposure, right? In a real estate, you are linked to what happens in that particular project, particular micro market, etc. Whereas in equities, you are spreading your risk across many other industries, and that is the benefit that you get.
Correct. You rightly pointed out. Liquidity is a great thing, and also, real estate comes with a unique risk, as you said.
Right.
It has unique risk specific to that location, to that city, etc. And then one or two questions we will end. Was it? Action is over, or wait till April 2nd to invest lump sum in mutual fund. What is on April 2nd, Harsha? Do you know anything?
No, I think, even Trump himself may not know what he's going to do on April 2nd, because every day morning there is a new statement, every day evening that is getting reversed. All of that is happening. So we'll have to wait and see rather than speculating on what is coming on April 2nd. But April 2nd seems to be the deadline for some of the economies that he has given in terms of either to fall in line or to expect higher tariffs, etc. So let's see where it goes.
Oh, I see. Okay, then he will extend.
But even after some statement that comes on April 2nd, it's not the final, right? I mean, it can change thereafter as well. So we really don't.
Extend 15 days or 20 days.
Yes.
So whatever, or 30 days, or he will reduce whatever. Then I think more or less we have answered all the questions. One question is here, because of Tesla entry, will there be any issue in Indian market for automobile companies?
See, the lowest price at which Tesla would sell, assuming zero tariffs, is also something like 35-40 lakhs, right? What is the market in India for those kind of vehicles is something that you will know. There is not a big market in that price range. So that is at zero tariff. If there is some import duty, then obviously it will be even higher. So I don't think it's going to make much of an impact at this point of time.
Anyways, thank you, Harsha, and subscribers. Again, sorry for the delay. It was because of this technical issue with Zoom, and we did with Zoho right now this session. Anyway, thank you, Harsha. Thank you. I appreciate your time. I appreciate your patience, for the delay. And really, it was an insightful discussion and very in plain, simple English terms, without jargon. And it has been a great thing. And from our side, we wish everything good for Kotak Mutual Fund and all the investors, of India. So thank you so much, Harsha. See you another time, probably when you are here. Huh? Thank you. Thank you, viewers. Thank you.